Now, in the last week, we've seen the Central Bank of Kenya lower interest rates to 6%, and that's by way of stimulating credit growth in the economy. Why are banks so reluctant to lend, especially because we're told that they have reserves, they are liquid, they are in a position to lend?
Well, I think it is a big issue, and this one that concerns the Central Bank of Kenya and the Kenya government in an urgent manner. The banks are unwilling to lend because they're making record profits. Thank you very much. Most of our biggest banks in the past year recorded record profits, posted record profits. Their assets have grown, their deposits have grown, and their profits have grown. So I think they're being smug about this. But there is competition coming in from non-banks, from the stock exchange, as a source of credit, and the central bank is thinking out what it could do about the big spread, which is discouraging savings and borrowing in Kenya.
Now, obviously, monetary policy and intervening on interest rates is one measure that can be taken. What other policy measures can be taken by authorities to try to promote the flow of credit into the system if interest rates are not working as an instrument?
The banks complain that collateral in Kenya is hopelessly unreliable because land and registration of land and the capacity to transact court cases when there is default is something that is discouraging credit to a very wide segment of the market. The new constitution has provisions that will solve this, but as you can see, this is a long-term solution. The second policy that the government has adopted is to bring in credit referencing in a big way. I think this is more encouraging than the former governance intervention on land and collateral. And at the moment, there's a lot of cooperation from the consumer end of the market, and also between banks, credit referencing, and also sharing of information. That is a good news, I think, as far as this problem is concerned so far.
Let's talk about incentives that are needed for banks. Experts are concerned about what they term deposit and loan tenure in Kenya. They say that because of short-term deposits, it's very difficult to access long-term financing in Kenya. How can that be rectified?
Now, it can be rectified, as I've said, looking at the long-term institutional issues in the legal sector's registration, the court system, litigation, and all of that, credit referencing. But at the moment, the central bank is looking into a detailed study of what is making the spread, the large spread so sticky, despite the incentives to the contrary. I believe that the banks themselves are willing now to listen more than in the past. The problem right now is that the competition between the banks in Kenya is not anywhere as fierce as it should be for an economy this size. Just about 6 or 7 of the 44 banks in here account for about 80% of the deposits. We have very weak antitrust legislation, and the antitrust legislation we have doesn't have teeth. We have to look into all these issues, the legal side, the economic side, the administrative side, before we decide what should be done.
You're talking about competition not being as aggressive as it ought to be, but we're beginning to see some movement in this regard. Many Kenyan banks starting to target the small and medium enterprises as potential clients because of the debt burdens that many corporates face. So now they're beginning to develop products for SMEs, seeing them as a new frontier. What are your expectations for how dynamic banking can become as they start to expand in this area?
I think the dynamics will come because the SMEs as a client of the credit market is growing. The competition that you refer to is principally at the lower end of the market. So the numbers are large, the volumes aren't that large. You're talking about smallholders, family credit, microcredit, the lesser end of the SMEs. All this is doing very well, and I believe that is what Equity is seen as a leader in the market. But I believe that Kenya can take credit for unbelievable innovation in connecting the telephone handset to the banking sector for the retail end of the market, and particularly for the mass market. And that is working very well. We are still at a very early stage to know whether this can transform from short-term to long-term deposits and long-term lending.
All right, let's talk about innovations. You refer to mobile banking, and I think that's been revolutionary in East Africa and for many other African countries, including South Africa, to learn from. But as you consolidate the East African community and the profile of Kenyan businesses grows beyond Kenya, trade finance, for instance, is going to be something that's in huge demand. What kind of innovations do banks need to start thinking about?
Well, I think microcredit through the phone system is still it's still a frontier which has not been overcome yet. There's plenty of opportunities on that end. When we look at innovation, it is quite clear that ATMs, and there have been studies done on this in the Central Bank of Kenya, ATMs have been clearly the most revolutionary technology innovation that has been in the banking sector. The deepening of the use of ATMs or spread of ATMs in the rural areas has nowhere come to saturation, and the smaller towns in all of East Africa. There is a possibility of growth there. The banks and quasi-banks in this region have not been as radical in innovating at the if you like, customer account services and of the business.
All right, let's talk about going forward at this general state of the Kenyan economy. Inflation looking benign at 3.2%. But do consumers have an appetite for debt? You know, we talk about the banks being reluctant to lend, but do consumers want to borrow?
I think consumers do want to borrow. There was a spike in borrowing between 2005 and 2007. Then we had in this country the political instability and the economic shrinking combined with the global economic crisis. This is a segment of the market that is very sensitive to employment and personal incomes. As soon as personal incomes and wages started falling in 2008, 2009, you begin to observe non-performing loans being reported at an increasing rate by the banking sector. So the economy is picking up now, and as you would expect, household consumer credit is also beginning to rise. So yes, the consumers do have an appetite for credit. It is expensive, but there are other channels, other than banks, by the way, competing for this for customers of this description.